Welcome to the deep dive. Today, we're cutting through the noise to bring you the essential insights from the 2024 annual report of RTX.
Yeah, a real titan in aerospace and defense.
Exactly. And this isn't just about, dry financial numbers. It's a deep dive into the trends, the innovations, and maybe the pivotal challenges shaping how we connect and protect our world.
hmm
Our mission today is really to extract the most important nuggets of knowledge, understand their strategy, and we'll ultimately see what it all means for you. Okay, let's unpack this.
Absolutely. This annual report, it gives us a rich, detailed snapshot of RTX's operations, really sheds light on their financial health and their critical strategic priorities.
hmm
We'll explore their industry-leading businesses, delve into the forces driving their financial performance, and uncover how they're planning to create shareholder value, all while, navigating a pretty complex global landscape.
And RTX famously states they're pushing the limits of technology and science to redefine how we connect and protect our world. They do this with a massive global footprint, something like 186,000 employees.
Around that number, yeah. Operating through three major businesses: Collins Aerospace, Pratt& Whitney, and Raytheon.
Okay, so let's start our journey with Collins Aerospace. What exactly do they do, and what's truly driving their segment's performance?
Well, Collins Aerospace is a powerhouse. They do technologically advanced aerospace and defense products.
Like what specifically?
Think of almost anything that goes inside an aircraft or spacecraft.
Yeah.
Sophisticated avionics, flight control systems,
Okay.
complete cabin interiors, even environmental control and power systems for human space exploration.
Wow.
And
Okay.
they're also heavily involved in aftermarket services, both civil and military aircraft. Their adjusted net sales for 2024 were $28.3 billion.
28.3 billion.
Yeah.
That's significant.
It is. And it's not just a number. It really reflects a remarkable turnaround. They're outpacing industry recovery benchmarks and sort of showcasing their dominance, especially in sustainable aviation components.
Ah, sustainable components. That's interesting.
Yeah, it positions them incredibly well as the whole industry shifts towards greener technologies.
That makes sense. So, beyond those impressive sales figures, where are Collins Aerospace's key initiatives, their growth strategies? Where are they focused?
Collins is making some pretty strategic investments, expanding their operational capacity across critical global locations: India, Mexico, Singapore, Puerto Rico.
Spreading out.
Exactly. And what's particularly compelling is their heavy focus on sustainable aviation technologies.
You mentioned that.
Yeah, they're not just dabbling, they're exploring new frontiers with biofuels, hydrogen, hybrid electric power sources.
So, really pushing the envelope there.
They are. And this isn't just, good for the environment. It's crucial for airlines facing escalating operating costs and stricter regulations. Collins is innovating right at the heart of future industry demand.
So, Collins Aerospace is really leaning heavily into the future of flight with the sustainable tech. That makes me wonder, how are their engine counterparts at Pratt& Whitney powering that same journey, especially after, well, what we heard about last year?
Right. Pratt& Whitney is, of course, a world leader, designing, manufacturing, servicing aircraft engines, commercial, military, general aviation,
The whole spectrum.
pretty much. They also produce auxiliary power units, APUs. Their adjusted net sales for 2024 came in just slightly lower than Collins at $28.1 billion.
Okay, $28.1 billion. What were the standout achievements for Pratt& Whitney this year? What's driving the excitement in their segment?
Well, a major standout is their GTF engine, the geared turbofan. This isn't just an engine, it's a pretty revolutionary design. Delivers significant fuel efficiency, reduced noise, which is why it's such a key growth driver. They secured over 950 orders and commitments.
Over 950. Wow.
Yeah, and they've aggressively expanded their GTF aftermarket network, up to 18 facilities now, boosting output by roughly 30% just in 2024.
So catching up on service too.
Trying to. On the military side, they completed the preliminary design review for the F-135 engine core upgrade, the ECU. That secured a contract valued up to $1.3 billion.
Military contract.
Huge. And they opened an enormous 845,000 square foot facility in Oklahoma City, specifically to service military engines. Plus, their engines are powering the B-21 Raider, which is, progressing its flight test program.
Okay, lots going on there, but I was quite struck, reading the report, by the prominence of the powder metal matter. This isn't just a minor blip, is it? It had a multi-billion-dollar impact.
Oh, absolutely not minor. It's a very big deal.
Can you help us understand the full scope of this issue and what it tells us about the complexities of modern aerospace manufacturing?
Definitely. So back in 2023, Pratt& Whitney identified this rare condition in the powder metal used for certain engine parts. It primarily affects the PW100 GTF fleet. That's the one powering the Airbus A320neo family.
Okay, a very popular aircraft.
Exactly. This necessitated accelerated inspections, and the result is, well, many aircraft are expected to remain on the ground through 2026.
Through 2026, that's a long time.
It is. And beyond the significant financial hit, that $2.9 billion pre-tax operating profit charge they took in Q3 2023.
Right, for compensation and maintenance.
Exactly, reflecting their 51% program share.
Yeah.
But the real insight here is how a single component flaw, even in a mature technology, can cascade into a multi-billion-dollar crisis.
Yeah.
It really forced Pratt & Whitney into a critical look at its entire supply chain resilience, its quality control processes. It raises huge questions about, their reputation and how quickly they could restore full operational confidence with their airline customers.
That's a powerful illustration, just the interconnectedness and the immense complexity. Okay, let's pivot now to Raytheon. What's their critical role in RTX's portfolio, especially, in today's global climate?
Raytheon is the leading provider of defensive and offensive threat detection, tracking, mitigation capabilities, primarily for government, but also commercial customers.
So think missile defense.
Think integrated air and missile defense systems like Patriot and NASAMS, smart weapons, advanced sensors, space-based systems, the whole 9 yards. Their adjusted net sales for 2024 were $26.8 billion, reflecting just immense demand right now.
Given that demand, what are Raytheon's key initiatives? How are they actually addressing this surge?
Well, they've poured over $500 million into expanding production facilities.
$500 million just on facilities?
Just on facilities. A big chunk, $115 million, went to increase missile integration capacity by 50% at their Redstone facility in Huntsville, Alabama.
Wow.
And this isn't just about scaling up. It really underscores the urgency of the current global security landscape, doesn't it?
Absolutely.
They're ramping up production significantly. ANRAAM missiles up 57% from 24 to 25. GMT missiles up 42%. The combat-proven Coyote system up a staggering 93% in 2025. They're aiming to double its current capacity by 2027.
Incredible increases.
Yeah, and they secured billions in major contracts in 2024. Patriot systems for Germany, LTMDS for the U.S. Army and Poland, Standard Missile 3 for the U.S. and Japan. It just highlights this robust global demand for their defense capabilities.
Makes sense.
It's also worth noting, though, Raytheon took a $0.5 billion charge in Q2 2024. That was related to the termination of a fixed-price development contract with a foreign customer.
So not all smooth sailing.
No, it can be a tough lesson on the risks involved in certain fixed-price development deals.
Okay. So we've seen how each of RTX's businesses are pushing their own boundaries. But what happens when we zoom out? How do these individual strengths combine into the broader RTX strategy? What does the overall financial picture tell us?
Right, when we look at RTX as a whole, it's clear they have a really robust foundation. Across all segments, they recorded a total backlog of $218 billion.
$218 billion. That's enormous.
It's a huge number, a clear indicator of the high and sustained demand for what they do. And they're focused on 3 strategic priorities, which, sometimes sound like corporate speak, but here they feel quite real.
Which are?
Executing on commitments, vital with that massive backlog. Innovating for future growth, absolutely essential in this rapidly evolving threat landscape. And leveraging their breadth and scale, that unique advantage of having commercial aero and defense under one roof.
Okay.
And this new RTX Lifecycle Program Management Framework, RLPM, rolling out in 2025. It's specifically designed to synchronize knowledge and best practices across these diverse businesses. Could be a real game changer for efficiency and integration if they get it right.
Interesting. Let's transition now to the overall financial picture for 2024. What do the numbers tell us about RTX's performance? What truly stands out?
Well, the 2024 financials, they indeed show robust growth. It signals a strong recovery and a solid response to market demand. Adjusted net sales hit $80.8 billion.
$80.8 billion total.
Yep. Adjusted earnings per share were $5.73. Cash flow from operations hit $7.2 billion, and free cash flow was $4.5 billion.
Those are big numbers.
They are. And they represent significant operational achievements, especially considering some of the challenges.
So what were the key reasons, beyond just sort of generic demand, behind this impressive performance?
The company attributes it to a remarkable period of growth across both aerospace and defense. On the commercial side, air travel surged back, fully rebounding from the pandemic. That means increased demand for Collins and Pratt& Whitney's products and services.
Right, more planes flying, more parts needed.
Exactly. And on the defense side, there's just this unprecedented, urgent demand for Raytheon's products and solutions, driven by ongoing geopolitical tensions, the critical need for national security.
Understandable.
What's also key is their investment in the future. In 2024, RTX poured $10.3 billion into R&D, both company and customer-funded, and capital expenditures.
$10.3 billion in investment.
Yeah, this isn't just maintaining the status quo. It's really laying the groundwork for next-generation capabilities. It's also interesting to look at the sales mix quickly. 54% commercial, 46% defense.
Pretty balanced.
Quite balanced by type. 74% products, 26% services, and geographically 57% U.S., 14% Europe, 20% Asia-Pacific. That balance and global spread really speaks to their strategic agility, responding to different market forces.
You highlighted the powder metal matter earlier. How did the absence of that huge charge specifically influence the 2024 operating profit?
That's a critical point. A really significant factor contributing to that $3.0 billion increase in operating profit in 2024 compared to 23 was precisely the absence of that $2.9 billion pre-tax charge from the powder metal issue.
So a big chunk of the profit growth wasn't new profit, it was just not having that massive loss again.
Exactly. It highlights how much that one issue impacted the prior year. Additionally, a $24 billion gain from selling their CIS business in Q1 2024 also contributed positively. It shows how these one-time events can really swing the annual results.
Right. So despite this strong overall performance, what were some of the persistent headwinds, the challenges that impacted the business in 2024?
Well, even with robust growth, RTX faced ongoing supply chain disruptions. It's hard to overstate this.
Still a problem then.
Still a problem. Imagine trying to build a complex engine or a missile system, and you're waiting on one tiny specific microchip or some crucial raw material from across the globe.
Creates bottlenecks.
Huge bottlenecks, impacting their ability to get materials at the prices and times they expect. They also continue to experience challenges in hiring highly qualified personnel.
The talent crunch.
Especially engineers, skilled laborers with security clearances. It's a tight labor market, although they note competition has softened slightly. But for a company so critical to national security, this talent crunch can directly impact their ability to meet that massive demand we talked about.
Makes sense.
And of course, inflation continued to increase material, component, and labor costs. Just another layer of pressure.
Okay. Now, a key focus for many listeners is how a company translates all this performance into value for its shareholders. What strategic moves did RTX make in 2024 on that front?
RTX clearly emphasized maximizing operating income and cash flow to create shareholder value. In 2024, they paid $2.48 in dividends per common share.
Consistent dividends.
And the board has already declared a dividend of $0.63 per share payable in March 2025, so signaling continued commitment there. They also have an active share repurchase program.
Buying back stock.
Exactly. In October 2023, the board authorized an $11 billion share repurchase program, replacing an older one. And as part of this, they entered into $10 billion accelerated share repurchase agreements, ASRs.
Okay, $10 billion in ASRs. This raises an important question. What exactly is an ASR, and what's the financial impact of such a massive share repurchase, especially one of that scale?
Right. So an accelerated share repurchase, an ASR, is basically when a company buys back a huge block of its own shares very quickly, usually from an investment bank.
Okay.
RTX upfronted $10 billion to immediately get back about 108.4 million shares at an initial price around $78.38 per share. The final price gets settled later.
That's a very bold move.
It is. It signals strong confidence from management. They're essentially telling investors, look, we think our stock is undervalued, and this is the best use of our capital right now.
But there have to be trade-offs, right?
Oh, absolutely. It's not without its strategic trade-offs.
Right.
The report itself notes that this increased indebtedness tied to the ASR transactions shifts significant cash flow away from operations and toward paying debt principal and interest.
So less cash for other things.
Exactly. While it signals confidence, it reduces funds available for things like acquisitions, crucial R&D, other reinvestments in their core businesses. It impacts their flexibility to react to market changes.
I see.
They're also managing significant pension and post-retirement benefit obligations, making contributions to trust. And the difference in accounting for these FAS versus CAS that also affects their reported segment results.
And just to quickly clarify for our listeners, what's the essence of that FAS versus CAS distinction? Why does it matter here?
Sure. Think of it like this. FAS, Financial Accounting Standards. That's how RTX reports to investors and the public. It shows their overall financial health according to generally accepted accounting principles.
Okay, public reporting.
Right. CAS, Cost Accounting Standards, on the other hand, that's how they report costs specifically to the U.S. government for their contracts. It's a different set of rules, tailored for government contracting.
Got it.
Because RTX is such a major government contractor, these different rule books can lead to different reported results for the same activities. It mainly impacts how specific segments, especially Raytheon, appear financially in different contexts. Adds a layer of complexity, you know?
Definitely sounds complex. So, looking ahead then, how does RTX see itself positioned in the market given everything we've discussed, the growth, the challenges, the investments?
Well, RTX states it is entering an era of great opportunity. And that's driven by that unprecedented demand we keep mentioning for their products and solutions.
They seem confident.
They do. And it isn't just, a rosy outlook. It seems backed by their active investment in next-generation tech. Things like hypersonics, advanced materials, artificial intelligence, all critical for future defense and aerospace.
Right, the cutting edge stuff.
Exactly. And they're advancing hybrid electric propulsion for future aircraft, that clear nod to sustainable aviation we discussed with Collins. Operationally, they seem laser-focused on delivering solutions faster.
Like the Patriot radar example.
Precisely. Raytheon developing that 360-degree Patriot radar system in just over a year in response to new threats that shows incredible agility. They're also using RTX ventures strategically, investing in new market entrants, providing funding, mentorship.
So tapping into external innovation too.
Yeah, to accelerate innovation and maybe gain early access to disruptive technologies. It's a smart play.
That focus on speed and innovation is fascinating. But what are the key risks? The challenges they face moving forward, particularly in this, very dynamic global landscape?
There are several factors that could significantly impact their future path. Continued global economic conditions, inflation, interest rates, capital market volatility, political conditions, geopolitical conflict.
All the big macro stuff.
All the big macro stuff. It can directly affect demand for their products, disrupt those supply chains further, influence government budgets. Then there are the ongoing challenges with the supply chain disruptions themselves and the ability to attract and retain that highly skilled talent.
Still major factors.
Absolutely. And finally, regulatory matters. Stringent export controls, evolving environmental laws, the immense complexities of government contract compliance. These pose significant constant considerations that require really careful navigation.
Okay. We've unpacked a lot today from RTX's 2024 annual report. We've gone from the specific contributions of Collins, Pratt & Whitney, and Raytheon, exploring their unique challenges like that powder metal matter, to the financial numbers telling their story of, robust growth amidst those headwinds and how they aim to create shareholder value through dividends and those big buybacks. It's a complex, really dynamic picture, isn't it? A company navigating massive global demand, pushing technological frontiers, but also grappling with significant operational challenges.
Indeed. We've seen a company with an impressive, $218 billion backlog?
Yeah, huge.
And clear strategic priorities for innovation and capacity expansion. Yet, at the same time, they are grappling with very specific issues like the powder metal fallout, alongside those broader macroeconomic pressures and the constant race for talent. It's quite the balancing act.
It really is. So for you, our curious listener, here's a provocative thought to maybe mull over. How does a company like RTX, operating right at that critical intersection of national security and global connectivity, effectively balance its commitment to long-term, groundbreaking innovation and huge R&D investments, like in hybrid electric engines or hypersonics, with the immediate pressing needs of operational challenges, those persistent supply chain disruptions, and the constant demand for short-term shareholder returns, especially when global security needs feel so urgent right now?
That's a great question.
How will these strategic choices shape not just their bottom line, but maybe the very future of aerospace and defense itself? Something to ponder until our next deep dive.